what if the biggest opportunity in silver right now isn't silver itself, but something most people still aren't paying attention to? What if stocks trading at just a few dollars today could realistically move 5 to 10 times higher in the same market cycle? Not years from now, but much sooner than most expect. That sounds extreme, almost unbelievable, and that disbelief is exactly why these opportunities exist in the first place. Welcome back to Hidden Silver Report, where we break down what's really happening beneath the surface of the metals market without hype and without shortcuts. Before we go any further, take a second to subscribe to Hidden Silver Report and turn on notifications. This sector doesn't move slowly when it moves. When momentum shifts, it happens fast, and staying informed early can make a real difference. Now, a quick disclaimer before we begin. This video is for educational purposes only. It is not financial advice. Markets involve risk, prices can move quickly, and you should always do your own research or consult a qualified professional before making investment decisions. Now, let's talk about what most people misunderstand about silver. When investors think about silver, they usually think very simply. If silver goes up, they expect to make money. If silver goes down, they expect to lose money. That's true if you only own physical silver or a basic ETF. But historically, the biggest gains during silver bull markets haven't come from silver itself. The real acceleration happens somewhere else, and it catches most people off guard every cycle. Silver mining stocks behave very differently from silver, and the reason is operational leverage. Mining companies have relatively fixed costs. They still pay for labor, energy, equipment, and maintenance, whether silver is cheap or expensive, but their revenue changes immediately with the silver price. That difference between stable costs and rising prices is where powerful upside is created. Imagine a mining company producing silver at a cost of $20 per ounce. If silver trades at $30, they make $10 per ounce. But if silver rises to $60, their costs don't double. Their profit jumps to $40 per ounce. Silver doubled, but profits quadrupled. Stock prices respond to profit expectations, not just metal prices. That's why mining stocks don't simply follow silver higher, they magnify the move. This isn't theory, this is exactly how past silver cycles played out. In previous bull markets, silver itself often moved 2 or 3 times, but strong mining stocks regularly moved 5, 8, even 10 times. Smaller companies with higher sensitivity to price moves sometimes delivered even larger gains. Stocks that looked unimportant early in the cycle became leaders later on, and almost no one believed it while it was happening. We're starting to see early signs of that pattern again. Silver has already moved meaningfully from its lows, but many mining stocks are still lagging. Some investors see that lag and assume something is wrong. Others recognize it as a normal phase of a metals cycle. In the early stages, money flows into the safest exposure first. Investors buy physical silver. They want confirmation. Once confidence builds, capital starts searching for leverage. That's when mining stocks begin to outperform. The lag isn't weakness. It's often the setup, but this is where many investors make mistakes, because not all mining stocks are the same. Large producers tend to be more stable. They operate multiple mines, generate consistent cash flow, and usually offer steady leveraged exposure without extreme risk. Mid-sized producers are more sensitive to rising prices and can deliver stronger returns, but with higher volatility. Development stage companies depend heavily on silver prices and financing conditions. In strong markets, their value can rise quickly. In weak markets, they struggle. Exploration companies sit at the highest risk end of the spectrum. Most fail, but a small number can deliver exceptional returns during strong metal cycles. This is why blindly buying silver miners isn't a strategy. Knowing what category you're in defines the risk you're taking. There are also signals that help separate stronger opportunities from weaker ones. Volume matters. Strong volume during price breakouts suggests serious money is entering. Relative strength matters too. When silver rises and a miner rises more, that's leverage working correctly. Costs are critical. If production costs stay stable while silver prices rise, margins expand rapidly. Production growth matters as well. Companies increasing output into rising prices are rewarded far more than those standing still. But mining is never risk-free. Projects get delayed, costs rise, governments change rules. Political risk is real, especially in mining jurisdictions. Dilution is another constant threat if companies issue new shares irresponsibly, and leverage cuts both ways. When silver falls, miners fall harder. Volatility is normal, even in bull markets. That's why structure matters. Physical silver can act as a foundation. Mining stocks act as amplifiers. Used together and sized properly, they can enhance returns without unnecessary risk. Mining stocks also test psychology. They move fast. They pull back hard. Many investors panic or fall in love with stories instead of fundamentals. But stories don't generate cash flow. Production and margins do. The investors who succeed here aren't the smartest, they're the most prepared. They understand what they own, manage risk, and don't panic when volatility shows up. Now I want to hear from you. Have you ever owned silver mining stocks before? And if you had to choose, would you prefer steadier exposure through large producers or higher potential upside through smaller companies? Share your thoughts in the comments and learn from others watching. Looking ahead, expect volatility. Expect sharp moves. Expect winners and losers to separate as this cycle develops. If silver continues higher, broader investors will eventually notice. That's when enthusiasm turns into speculation. This isn't a recommendation, it's education, but history is clear. When silver enters strong bull markets, mining stocks have repeatedly delivered returns the metal itself could not. If this video helped you see silver miners more clearly, like the video, subscribe to Hidden Silver Report, and share it with anyone following precious metals. Your support helps this channel reach people who want real market insight. I'll see you in the next one.